Multiplicity Secondary Value Index was constructed out of one component, which is basically a performance index of the overall private equity industry as measured by the Preqin indices. And the second component is the secondary market price in terms of in percentage of NAV. And if you multiply those, you see basically the value that you can get today when you transact in the secondary market. As a seller, of course, there's little need or there's little benefit if you sell it at NAV, but the NAV was down 20%. That's as bad as if you sell it at a 20% discount and the NAV hasn't been adjusted. So that's what we really want to measure with that. What we do see now in 2018, at least until September 30, that's when until when we have the data, is that the underlying performance indices on buyout, venture, and fund of funds are all up between 10 and 13, 14%. So clearly, a lot of value has been generated again in the private markets industry. When we look at the secondary market index, is also that the spreads have probably tightened a little bit more. I think particularly on some of the buyout names, it depends of course how we measure it, but I think there we could on average be even closer to par values. So clearly you're again better off this year to sell your interests now compared to last year. I think it's very important that you look at secondary market pricing also across the whole quality spectrum of the funds. As a seller, you must know, if you sell a top quartile fund after, let's say, 4, 5, 6 years, and you sell that even at a 20% premium, you leave much more money on the table than when you sell a bottom quartile fund at a 50% discount. So I think it's very important that people look at not just NAV, but also what they can expect going forward. And there is clearly a very strong momentum factor that must be taken into account.